Anything on dividend?
When we discussed about the shares, I feel we have discussed about dividends.
No, we have discussed something in precise about dividend. Think about it. Think about it. We have discussed something about dividend. Major aspect of dividend. Apply your mind little bit.
In the remuneration chapter?
No. Anyone can recall where we have discussed dividend?
Ordinary business, AGM.
Perfect.
General meetings.
Do you recall?
Yes, sir. Means in the 19th chapter, the general meetings actually.
In the general meeting, one of the agenda item for ordinary business is what?
Declaration of dividend.
Declaration of dividend.
Declaration
Right?
of the dividend.
Correct?
Yes, sir.
Okay, so today we'll be discussing on dividend. Right, so when can a company go ahead and declare a dividend? Right, what is a dividend and what is the process for declaration of dividend? Only when company has profits.
When company has profits, the company can decide in the board meeting to declare the dividend. Actually.
Correct. So major crux of this chapter is first board of directors needs to decide whether they want to declare dividend or not. But in order to consider for declaration, there need to be sufficient profits or sufficient reserves.
Yes.
Right. One of the ordinary business we discuss is dividend. Generally, you don't see dividend in that for ordinary business, right?
Yes, sir.
Okay. Few companies may declare dividend, yes, but few companies do not declare dividend. Whenever it is declaring, then you will see that agenda item coming in the ordinary business. If they do not, company is loss making or company do not have the sufficient profits or inadequate profits or doesn't have enough reserves, then it will not declare dividend. Okay. Now, what is dividend? Dividend is the shares that you hold in a company.
Yes.
For that, you get a return as a shareholder. Meaning a profit earned in the business is distributed in the form of dividend. As a shareholder, because the board of directors may declare a dividend, so it's a cash payout. Right? Basic understanding is first there needs to be a profit for the current year or any of the previous year, or there should be a reserve, adequate reserve, so that dividend can be declared out of the free reserves, right? And the board of directors should have a sufficient cause for declaration. Look, generally what happens in an AGM is shareholders are not concerned about adoption of accounts or appointment of auditor. For them, what matters is dividend. They will question the board of directors why company is not declaring dividend. That is what 90% happens in the AGM. So being there in the AGM, your directors are answerable to the shareholders. It may be genuine reason that company is not doing well. That is why board of directors do not want to declare dividend. Now shareholder will question why company is loss making, why company is not doing well, what is going wrong. We want the company to declare dividend. We want to enjoy the dividends. You're able to understand, right? Okay, this is the very basics of dividend. Now, in the entire chapter, we'll say about how to declare a dividend and what are the process that you need to follow to declare a dividend. It's a very simple chapter, one definite 4 marks question. Very simple chapter. Okay, if you just read it through once, 100% right. Okay, now come to page number 241. Meaning of dividend, that is definition. Company defines dividend. Very simple, it says dividend includes interim dividend. That's all. Okay, there are two kinds of dividend. One is interim dividend, another one is final dividend. Please make notes if people are not reading. As I said, it's a very simple chapter. We're going to complete it very quickly. Right? Concept is also very lucid concept and definite 4 marks question. There are two types of dividend: interim dividend and final dividend. The definition says dividend includes interim dividend. So which means anything and everything can be considered dividend if the board of directors feels.
Sir, I think you have a
But
network
interim
issue.
dividend is also forming part of a dividend. Okay. Largely there are two types of dividend, as I said.
Manoj, there is some network issue. Your voice is.
Final. Yeah, sorry. Just a second. Is it audible now?
Yeah, Manoj. I think this
Yeah.
network is clear as compared to the previous one.
Yeah, because I think there is some fluctuation in this network.
Okay.
Right? Okay, sorry if you can't get the entire sentence what I said, you can ask me to repeat. I'll repeat. Not a problem, right?
I think it
You said there
depends-
are two types of dividend, interim and final.
Yeah, two types of dividend: interim and final dividend. Yeah, so as I was saying, dividend, there are two kinds of dividend: interim dividend and final.
Manoj, I think the whole
Definition says
whole network is stuck. I think in between we lost full.
dividend includes interim dividend. Is this network better? I've connected to a different network.
Yeah.
Yeah, sir.
Okay, from which point you want me to repeat again?
After the point where you told about the types of dividend, interim and final dividend,
Yeah,
the
so-
last part we missed out because it was blocked. The voice was blocked.
Yeah, correct. So there are two types of dividend. One is interim and final. Right? So whatever the ordinary business that we guys, you all discussed, right? That is concerned about final dividend. 4 ordinary business that we saw, we discussed. One of them is dividend, right?
Yes.
That dividend is called final dividend. So whenever board of directors approve the accounts, based on that they declare dividend,
Sir, whenever board of directors declare the dividend, then
Yeah, Nagendra, tell me.
sir means whenever board of directors declare the dividend, then after that what happens?
Yeah. So as I was saying, final dividend, the matter goes to the shareholders.
Shareholder.
Okay, because that is one of the ordinary business.
Yes.
Now what happens? The pre-AGM board meeting where accounts are approved,
Okay.
their dividend is declared. Basis your audited numbers, that is 31st 3. Basis that numbers, your dividend is declared. That dividend is called final dividend. Based on the recommendation of the board, that agenda is placed before the shareholders for the approval. That is called final dividend. Difference between interim dividend and final dividend is interim dividend sole authority is with the board of directors, which means between 2 AGMs, board of directors can declare interim dividend, but final dividend can be declared only at AGM.
So
What is the reason? Can anyone tell me what is the reason why dividend is only declared at AGM and not EGM?
Auditors will be there.
No.
They get
Did you understand the question,
After knowing
right?
the profit only they can, after knowing the profit only they can declare the dividends.
Yeah, that is correct. But my question is, why not in the AGM? Why can't a company declare a dividend in the AGM and only, usually it is only AGM, not usually, it is all the time AGM, but why not AGM is a question.
That means in the extraordinary general meeting, the special businesses are discussed. So it is
Perfect, Nagendra, superb answer. You're able to understand.
yes.
Ordinary business, can you deal in AGM?
No.
That is the reason you can't declare a dividend in AGM. Please remember that.
Okay.
Ordinary business, always AGM. Tomorrow you will get a question, board of directors have declared dividend. Now, final dividend, now it wants to approve the matter before shareholders in extraordinary general meeting. Kindly advise the company. Or whether company has already declared it in EGM, whether the dividend is valid. That is the question that you will get. Just little bit application of mind is required. We have discussed everything. Okay, that is called final dividend. Okay, where you need shareholders approval. Whereas for interim dividend, only board of directors have the sole authority to declare dividend in between AGMs. Right, between one AGM to another AGM. So whatever gap that you have between the AGMs, in between that board of directors can declare interim dividend, or before the approval of accounts, that is pre-AGM board meeting, from that period and before and after 1st April. 1st April after 31st 3, whatever accounts are closing, from that end, that is 1st April to pre-AGM, whatever time you have, that period and between AGMs, interim dividends can be declared. Interim dividends, few companies take up the matter to shareholders just to confirm that we have declared AGM, we declared interim dividend, and hence we are proposing this for confirmation. However, practically, from the perspective of the Act, such confirmation is not required. But few companies, if you look at the agenda items of few companies, they will say company had declared interim dividend to confirm the interim dividend declared. Right? Practically, that is, you take it, not take it, doesn't matter. But for final dividend, always recommendation will be made by the board of directors, approved by shareholders. Interim dividend, not necessary, you take it to the shareholders because board of directors has the sole authority. Practically, I'm saying few companies do take up the matter just to confirm before shareholders ordinary resolution.
On what basis will be the interim dividend be given, Manoj?
Yes, we will discuss that. Again, as I said, that is also profit and reserves.
Okay.
Right? Your basis for declaration originates out of profits or accumulated profits or reserves, wherein you have kept earning profits, okay, and after you earn the profits, you have transferred that profit to the reserves. Out of that reserve, you can take it up and declare dividend. You're able to understand, right?
Yes, sir.
Okay, so once dividend becomes, so once board of directors recommend the dividend, it becomes a debt, which means mandatorily they need to declare dividend. They cannot withdraw. Please remember this point. Once board of directors recommend final dividend, not interim dividend, final dividend, whenever board of directors recommends final dividend to shareholders, it becomes a debt. Board of directors cannot withdraw back. Dividend once proposed to shareholders cannot be withdrawn. It is like a liability. They need to pay off the liability. It is like that. You're able to understand, right? Dividend once declared becomes a debt. Hence, board of directors once recommends the final dividend cannot withdraw on whatever circumstances it may be. Okay, any doubts still here?
No, sir.
Sir, this point was repeated before. I think it's the charges chapter.
Which one?
This when dividends is declared to shareholders, it cannot be violated. So somewhere, just for confirmation.
Charges chapter. I don't think it was there in charges.
Okay, but somewhere it was discussed.
Okay. Okay, any doubts still here till this point, dividend?
No, sir.
Okay, now who gets dividend? To whom the dividend is declared? Now there are two types of shareholders. One is equity and other one is preference. Correct. Can the company have only preference shareholders? Is it possible?
No.
What is the reason?
Owners of the company, they need
Owners of
Yes, they are the owners, but what is the logic behind equity shareholders should exist always?
to pass any resolutions they are required. Because voting
rights there.
Correct. Equity shareholders have the voting rights, whereas preference shareholders only on case-to-case basis they have voting rights.
Okay.
Right. So without having the voting power, how can you move the resolution, right?
Yes.
So that is why it is mandatory to have equity shareholders. Now, mere isolation, you can't have a preference shareholders because what is preference? Is some privilege that you are giving to some other person, right? So there should be some other shareholder already, and to top that, there should be a preference, given preference. Always equity shareholder is ordinary, and for preference, it is always preference. What is preference? Payment of dividend. Okay. And what is another point?
Basis voting rights.
No. Then is payment of dividend, and at the time of liquidation,
they'll be paid first before paying to equity shareholders dividend.
Is that right?
Okay.
Preferential rights. Is that wrong?
Preferential right with respect to dividend, and other one is what? Okay, just read this point, para number 2.
That means the page number, sir.
241.
241. Holders of preference shares.
Or Siddharth can read loudly too.
Yeah.
No, not audible clearly.
Holders of preference shares receive dividend at a predetermined date and are paid first.
Okay, 1 minute. 1 minute. 1 minute. 1 minute. So whenever, even in your accounting, you will see this. Okay, whenever there is a preference share, right? Either they are paid fixed amount of dividend or certain percentage. Okay, remember whenever you're doing accounts or whatever it is, before the preference shares you will have percentage, certain percentage. Whereas for equity you will not have that percentage.
Agreed.
Right? So before that preference, that is the rate, dividend rate.
At which the company is going to pay them the
Dividend. Yes, it may be in the form of amount, fixed amount, or in the form of percentage. Okay, please remember this point. This will really help you in differentiating. Right? Okay. Yeah, read further. No, Siddharth, not clearly audible.
However, preference shareholders are not entitled to treat preference dividend as a debt and sue for its payment.
Okay, 1 minute. So now we discussed for a equity perspective that whenever board of directors declare, it becomes a debt and board of directors cannot withdraw, right?
Yes.
For a preference shares, that is not the case. That is not the debt at first place.
Means,
which means there are two kinds of preference shares. In the category of preference shares, there are two types.
correct.
One is cumulative, and other one is non-cumulative. Cumulative is your dividend keeps on accumulating.
Correct.
Right, which means this year you are supposed to get 10,000 rupees. Company didn't have profits. Okay, so next year it will get accumulated. So 10 plus 10, 20.
Yeah.
Next year also didn't have profit. Third year it goes 10 plus 10.
So whichever year the company is not able to pay that dividend, that money goes and parks into the next year. It gets carried forward.
Correct. That is a cumulative dividend.
Correct.
Whereas for a cumulative preference share, whereas for a non-cumulative, if the company do not have profit, that's it. You need not to pay preference shareholders.
Okay.
It does not cumulate.
Which means if the company gets profit in non-cumulative situation, if the company has profit, surplus profit, it will pay. If it is not having, it won't pay. The amount will not be carried forward, which means you won't be able to get the dividend.
Correct. So that is the reason. Preference shareholder cannot sue the board of directors.
Okay.
You're able to understand, right?
Yes, understood.
Whereas for equity, the case is different because equity shareholders before declaration of dividend has to be paid to preference shareholder first.
Correct.
That is a preference they are getting over equity shareholders. Okay, then only equity shareholders are paid dividend. So board of directors have declared, but now you want to withdraw, that is not allowed. Okay, go ahead. Next.
However, if the articles specify that the company's profit shall be applied by way of payment of the preference dividend, the preference shareholders can sue for it even though it has not been declared.
Okay, mark this as very, very important. Okay, your articles plays a key role here. Always look at your articles. If the articles contains any of this provision saying preference shareholders also can sue, then only they can sue. Otherwise, the act is silent. Primary rule is preference shareholders cannot sue the company for non-declaration of dividend.
But if
Okay.
article powers them, then they can.
Yes, yes. Okay, yeah, next line, Siddharth.
Holders of equity shares are entitled to receive any amount of dividend based on the level of profit and the company's need for cash for expansion or other purposes.
Okay, you're able to understand. So even though company has profit, it is up to the board of directors to decide whether they want to declare dividend or not. Okay, if company wants the cash reserves for the business, they can retain it. Shareholders cannot force for declaration. Please remember, it is the sole authority of the board. Shareholders cannot question the board. Even though company has profits, shareholders have no rights to question, right?
Yes.
Prima facie, even though they are shareholder, even though they are entitled to profit, they cannot demand dividend. Please get this point. Shareholders cannot demand dividend. Only when board of directors recommend to the shareholders, then only they can expect dividend. Okay. Just look at this point, last point in the line, in the bracket, in the tab form they have given, right? SS3 clarifies that distribution of discount coupons to all shareholders shall not be treated as deemed dividend. If you have any of the shares of the Indian hotel, the Taj Group, right? So what do? The year they don't declare dividend, for a shareholder they give this off, wherein you can check into any of the Taj hotels. If you're a shareholder, they will give you percentage of discount, 20%, 25%, 30%. Right? So that is a discount given by the company to the shareholders. In no way you can treat that as a dividend. Why I can't treat that as a dividend? What is the reason?
Then every time you can give coupons and say we have given dividend.
No.
No. Because that discount.
Initially I told one word. What is that? How should the company dividend? How should the company pay dividend? What is the dividend?
Profits
Profit.
Correct. Correct. Then?
or through free reserves.
Yes, then?
Declared in AGM.
Okay, then?
Yes.
What is that the shareholder has to get to form a dividend?
Shares.
On the basis of shares, he gets something. What is that he get?
On the basis
Profit.
of the shares, he gets the percentage of profit which is converted in the form of dividends.
Yeah, what is the dividend I'm looking for specifically? How it is paid?
Return.
Is it cash payout or it is paid in kind?
Cash.
It's cash payout.
Please remember, it is always paid in cash. That is why your discounts does not work. It is always cash payout. You cannot distribute coupons and say this is a dividend. Please do not forget this. Very, very basic. Tomorrow if you read somewhere, please differentiate between this and this. You should be able to, okay, shareholders are getting discount for checking in Taj hotels. Company is giving benefit to them as a shareholder. That in no way can be considered as dividend. You're able to understand, right?
Yeah.
Okay, difference between interest and dividend. When do you pay interest? When does a company pay interest?
When when they have when they borrow. I mean, when you're
Correct.
borrowing the money, you pay the interest.
Correct. So only when there is a loan or something that you have borrowed, then only the loan interest arises, right?
Exactly.
But whereas for a dividend, it is arising out of your profits.
Correct.
There, it is mandatory. You need to service your interest as per your agreement. Whereas here it is not mandatory. It is based on profits. Okay. Come to page number 242. Siddharth, can you just quickly read about final dividend, interim dividend, 2 points?
Yeah. Hope the voice is audible.
Yeah.
Okay. Final dividend. Dividend is said to be a final dividend if it is declared at the annual general
No, it
meeting of
is.
the company.
Your voice is low, Siddharth.
Low.
Yeah, now it's better.
One second. No, my other laptop was connected, so it was blocking.
Yeah.
Okay.
You're on the camera now. Let everyone see your face.
Yeah. I'm okay to it. Okay, the camera is on.
Yeah.
Okay. Final dividend is said to be a final dividend is said to be a final dividend if it is declared at the annual general meeting of the company. Final dividend, once declared, becomes a debt enforceable against the company. Final dividend can be declared only if it is recommended by the board of directors of the company in accordance with section 134 subsection 3 of K of the Companies Act 2013. Board of directors must state in the directors report the amount of dividend, if any, which is recommends to be paid.
Okay, 1 minute. So in the board of directors report, initially we made certain points, right?
Yes.
Please add this point. Recommendation of dividend. If you remember, we had listed out few points wherein board of directors need to mention in the board's report. In that, one point will be recommendation of final dividend. Now tell me, is it mandatory for any company to declare dividend?
No.
Not mandatory.
What is the reason that you are going to say? What is that the board of directors need to see before declaration of dividend?
As the company has the sufficient profits
Correct? Or
and
accumulated
reserves. Profits or
Correct.
reserves.
Correct. Okay. And even though if it has, does not matter. Still board of directors need to recommend, right? Okay, interim dividend.
Interim dividend. Dividend is said to be an interim dividend if it is declared by the board of directors between two annual general meeting of the company. All the provisions relating to the payment of dividend shall be applicable on the interim dividend also.
Okay, so whenever some process that we are looking for payment of dividend, same process we need to apply for interim dividend also. Procedure. Okay. Now, on the basis of nature of shares, we discussed, right? Preference and equity. Preference always gets certain percentage or fixed amount, whereas equity, it depends on each year.
Each year.
This year I have declared 10% example, next year 11 or 6 or no dividend. Okay, that depends for a equity shareholder, but for a preference, it is always fixed amount. Cumulative, non-cumulative, we discussed.
Yes.
Okay, come to page number 243. Equity shares. Siddharth, can you please read that?
Equity shares are those shares which are not preference shares. They do not enjoy any preferential rights in the matter of payment of dividend or repayment of capital.
Okay, 1 minute. So at the time, one is we all knew that dividend will be paid to first preference shareholders, then to equity, right?
Yes.
Now, if the company is going for a liquidation or a winding up, in that case, whatever the accumulated reserves, profits that you have, or assets that you have will be distributed to preference shareholder first over equity shareholder by virtue of being a preference shareholder. That is a preference that you are getting over equity shares. What is the two preference that you are getting? One is the dividend, another one is
Repayment.
Repayment of capital.
Repayment of capital at the time of winding up.
Yes.
Okay, yeah, go forward.
The rate of dividend on equity share is recommended by board of directors and may vary from year to year. Rate of dividend depends upon the dividend policy and the availability of profit after satisfying the rights of preference shareholders.
Okay, so dividend policy, it is mandatory for a listed company to have it. For an unlisted public company and a private company, this is not mandatory to have a dividend policy. So usually you log into any listed company website, you will have a dividend policy, wherein the policy says on what grounds that the company can pay dividend, or what are the circumstances that the shareholder can expect a dividend from the company. Before the shareholders question the board that why the company is not declaring dividend, they have to first go to the policy and read whether company is fulfilling all the criteria. You're able to understand, right? So this is mandatory for listed company, but other companies, even without the policy, they can still go ahead and declare dividend. Voluntarily, they can have dividend policy. But for a listed company, it is mandatory to have a dividend policy. Okay. Section 51, very, very important. Declaration of dividend, section 123. Below that, there is a point, right? 51. Now take an example. Face value is 10 rupees. Board of directors, till now, they have only called for 7 rupees. 3 rupees are still in arrears, which means board of directors have not called. So in this case, whenever a company wants to come out with a dividend and to the actual value paid, that is 7 rupees, to that proportion it can pay dividend. You're able to understand, right? Make sure your articles has up as this point. Proportional payment of dividend.
So the proportion of the payment that we have done towards that shares face value.
Correct. Article should clearly provide. Okay, this may look simple, but you will get a question in the exam saying company has declared dividend. However, there are few certain shareholders whose paid up is just 5 rupees out of 10. Now they are asking for dividend. Whether company can pay or obliged to pay. Right, proportional payment of dividend is possible provided your articles of association allows it. Okay, sources of dividend, very, very important. Mark it as important, source of declaration of dividend. So we discussed how do you declare dividend, what are the profits, but before you arrive at the profit, make sure depreciation has already been provided. What is depreciation?
Reduction in the value of assets.
Increasing the value.
Value of
Assets.
your fixed assets, right?
Fixed
Yes.
assets.
Okay, so make sure you provide appropriate depreciation. Then you arrive at the value of profits. On that profit, you declare dividend. But in no case, without providing depreciation, you can't declare dividend. You can't arrive at the profit, basically. That is the one criteria. Okay. See, look at the second point. Out of the profits of any previous financial year or years arrived after providing depreciation and remaining undistributed. Okay, one, as I said, current year profits, first point, or accumulated profits. Right, over the year you have earned profits transferred to the reserve, that also can be taken for the declaration of dividend or out of both. You can merge both of it and declare dividend.
Which one, Manoj? The merging part you told?
Out of both 1 and B, sources of declaration, right? Point A,
Hmm.
1, 2, 3. 1, 2, 3, third one.
Okay, yeah.
You will get a question. Please mark this as important. What are the sources for declaration of dividend? One is profits, current year profits, previous year and all accumulated profits, or out of both. Okay, in computing profits, make sure you do not include your notional gains, unrealized gains, reevaluation of assets. Look, all these notional gains, revaluation of assets, you are estimating certain profits, but as on date, still it is not there in the books. You are just notionaling, which means you are expecting something. There is a notion. You cannot consider that as profit and declare dividend on the basis of expectation. Suppose a company has invested certain money in certain company. Now that company will declare dividend on that particular share. Now company will get certain amount of cash, right? Now it cannot on that basis say I am earning profit since even I want to declare dividend, because that is a notional gain. You're able to understand, right? All these should be excluded while arriving at the profit. Or if it is a central government or a state government company, then by virtue of guarantee. Point number B, government companies. How will the government company declare dividend? One is point number A. If it has
profits, otherwise through government grants.
correct, government will give guarantee that you go ahead and will provide guarantee. In that case, it can't declare dividend, right? Okay, there is one in accordance with section SS3, right? Please highlight that point. Very, very important. So there is a separate chapter for deposits and debentures. So this is deposit. So whenever company has issued deposits and it has defaulted, in that case, it cannot declare dividend. Right? There is a separate chapter. We'll deal about that. Okay, but please make sure that whenever a company has defaulted in repayment of deposit or interest, company cannot declare dividend. Even though it has profits, does not matter, because it has violated the other provision.
Sir, can it take NOC from creditors and do it, or it is a
No, it
violation?
cannot. No, it cannot. It cannot, because Act itself prohibits that.
Okay.
The NOC will not work. Okay, last three also very important. A company shall not declare any dividend if it has defaulted. Redemption of debentures. The company has issued debentures, say for 5 years. 5 years maturity period is over. You are supposed to redeem that debenture, which means pay out the debenture holders. You have not done it. So in that case, you can't declare dividend, or you have not been paying interest on the debentures. Redemption of preference shares, creation of capital redemption reserves. Okay. Payment of dividend declared in the current year or previous financial year, or repayment of loan. Okay, point A, B, C, D, 4 points. Point 4, the point number D, next page, 244. This is the very frequent question they have asked in the exam. They will say company has borrowed certain money from HDFC Bank, right? It has defaulted. However, company has gone ahead and declared dividend. Now HDFC is saying this dividend is invalid because the act says company shall not declare dividend because there is a default subsisting. Now what happens to the declaration of dividend?
Means will not be considered, sir, actually. The dividend itself will not be considered actually, because when there is the default subsisting, the declaration of a dividend will not be considered.
Correct. Whatever you are saying is correct. Now think practically. Practically, is it possible to recall the dividend?
No.
No.
You have paid out to all shareholders. You have given everyone cash. Everyone's account is credited. Because of this, can you recall?
No.
It is practically impossible. However, directors will be held liable penally. Penal provisions will apply. You're able to understand the difference, right? Practical and theoretical.
Yes.
Okay. That was the first source of fund. Second, come to point number B, 244B.
Transfer of profits to reserves.
Underline this point, a company may. What is the difference between may and shall?
Compulsory is shall, may is not compulsory.
Okay, voluntary, right?
May or may not.
Correct. So in this case, what they are saying, whenever a company is coming out with declaration of dividend, it may transfer to the reserves, then declare dividend. Portion of, suppose I want to declare 50 crore as dividend. Before declaration, what I do, I transfer to the reserve, dividend reserve account, and then pay out. Okay, that is voluntary because the law uses the word may. They are not saying shall. So it is discretion of the board of directors whether they can do, if they want, they can do it directly, or if they do not want, they can either transfer to the reserve and then pay out.
Now, what's the difference between like moving it to the reserve and then paying out or paying directly? Is there any difference between those two?
Just entry, journal entry, that's all.
Okay.
Because under separate head, you are moving the budget. Out of general, whatever profits you have, directly without paying from that, you are creating a separate reserve for a dividend so that you will have a proper track of that. Point number C, super important. What is the difference between absence of profit, inadequacy of profits? We have discussed this somewhere.
CSR.
Managerial remuneration.
Managerial remuneration, that's correct. What is the difference between those two?
Inadequacy is insufficient. Absence is no profits.
Absence is company has no profits. What is inadequacy of profits?
Insufficient.
Insufficient. Company has profits, but in order to make such payment, the profits are inadequate. You're able to understand the difference? We discussed that in remuneration. Now, in this case, if the company has no profits or inadequate profits, this three mandatory condition needs to be fulfilled. Very, very important from exams perspective. 4 marks question. Straight away they will pick up this question and ask in the exams. They will say company has no profits, company is making losses, but yet want to declare dividend. Advise the board of directors whether they can do it. Okay, what is the first condition? The rate of dividend shall not exceed average rate of dividend. Which means if the company has been declaring a dividend, okay, now you take an average for the last 3 years, right?
Yeah.
Immediately last 3 years you take an average and declare dividend. It should not exceed. Make sure it does not exceed.
So whatever the average of 3 years becomes, it should not exceed that threshold limit.
Okay, now take an example. What if company has not been declaring dividend? How do you arrive at the average?
The amount of the dividend amount which the company is keeping as a reserve, that one's
Hmm.
average.
Proportionate.
Look, what does it say? This shall not apply to the company which has not declared any dividend in respect of preceding 3 years. Which means it can declare any percentage of dividend. If it has not been declaring dividend, which means it has not been able to capture the average. You're able to understand, right? Only if you're able to capture the average, that is last 3 year pattern, then you can arrive at the average, right? If it has not been declaring dividend, how do you do? There is no way you can arrive at the average. Whatever the board is declaring, that is the average.
So in this point, there are two scenarios. Scenario one is where we have the track of the last 3 years, where at the rate at which the dividend is paid out and taking that one's average, the company is paying. But
Correct.
in case if the company has not yet declared the dividend and there is no average of past 3 years, then whatever the board decides, you're telling at that rate the company will pay.
Correct. Now come to point number 2. Okay, make sure your total of paid up capital free reserves, whatever sum you are getting, make sure it does not exceed 1/10 of that for the profit calculation. Paid up capital plus free reserve taken together, whatever X amount you are getting, of that 1/10.
Yes.
Of that 1/10, whatever you are getting, and that basis you calculate the percentage. Understood or no?
You're telling
Yes, sir.
about the total paid up share capital plus free reserves equals to
Now,
what the final amount comes. It's
just take
1/10 percentage.
Yeah, just take a illustration down below.
Okay.
Okay, now look at point number 2. Let us add up paid up capital and free reserve. Free reserve is available for declaration of dividend, right? Free reserve is, you can say, general reserve, not any specific reserves. Specific reserves are like capital reserve, debenture redemption reserve, deposit redemption reserve. Those are specific reserve. From that you cannot take money from for declaration of dividend. General reserve you can take, free reserve you can take. Okay. In the given illustration, what is the paid up capital? Can you tell me the value of paid up capital? What forms a part of paid up capital?
17,50,000. Fully paid.
17,50,000. How did you arrive at 17,50,000?
100 rupees per each share.
Correct. That is preference. Then
Multiplied.
Equity shares.
It is 70 lakhs.
20. Paid up capital includes both preference and equity, correct?
Equity, yes.
Okay. So paid up capital you have arrived. Now plus reserve.
The reserve. So that comes down to 17,50,000 plus
45 lakh.
17,500 into
50 lakh.
100 comes to 1,750 plus 70 lakhs.
Do not take capital reserve. That is a specific reserve that is not available
Okay,
for
that comes
declaration
to
of dividend.
8,750 plus 21. 21, yeah. So 1 crore,
Okay.
1.85.
No, 10 lakhs 70 91 is the 1 point. That is 10% of that total 1 crore, correct?
Which one? So you're telling, see, we are adding preference shares total value,
Correct.
equity shares
Equity.
total value, and
Correct.
then general reserve.
Correct.
That
Correct.
comes to 1.85 crore.
Plus add surplus. That is a profit reserve.
Plus 63,000.
Correct.
So that comes to 1 crore 91 lakh 3,000.
Okay. So out of that, you take 10%.
Okay.
Because the loss is only
comes down to 1.91, 1.92 almost.
correct. So their precise value is given. If you look at that maximum amount that can be drawn.
Exactly. 1091300.
Okay. Out of that, what is the average that you can derive? See, average also they have given. Last 3 year average 15%.
Last 3 years average is 15%. Average is 15%. So this amount 15%.
You're able to understand, right?
Yeah.
So out of 10 lakhs, now you take 15%. That is a dividend payable.
164.
That is a dividend.
Yeah, 164.
That is a dividend payable.
Yes.
Sir, one doubt. That equity shares, even if they're not even paid up or not, should we take fully?
Hey, no, 1 minute. Siddharth, can you just minus 10 lakhs, 91,300 and the balance permissible last point, 8 lakhs 50,000.
1 second. So 10 lakh 91,300 minus
8 lakh 50,500.
8 lakh 50,500. Okay, 8 lakh 50,500. That comes to
2,40,800.
2 lakh?
2,40,800.
Okay. Now you calculate the percentage of preference dividend. 9%.
Dividend is 9%. So this 240,800 is 9%.
No. 9% of total 17,500 into 100.
1750 that will come.
Into 100, 9%.
Total of preference shares into 9%. 1,57,500.
1,50,000. Okay, so before declaration of dividend, make sure you pay preference shareholder whatever that value comes. Then only you can recommend for equity dividend.
So which means that total preference shares amount, whatever it is coming, it's 9%. First is paid out.
Correct.
Then the remaining amount we will.
Correct.
In this case, it will change. Okay.
Which case? See, in the given case, they are only given for equity computation.
Correct.
But if you look at, we discussed, again that depends on cumulative, non-cumulative. But what I'm saying is, make sure that before declaration of equity, the preference is paid.
Yeah, because preference is already having a 9% fixed dividend. So
Correct.
based on the preferences total amount, 9% is paid. Then the
Equity will be paid. Yes.
equity will be paid.
Okay. Yes, Kushal, you were asking some.
In second point, sir, 7 lakh equity shares of rupees 10 each.
7 lakh.
In the illustration.
Illustration.
Okay. Where?
Second line.
Okay.
7 lakh equity shares of.
One doubt is that, is it always in a company, always the equity shares will be fully paid up?
No, that again, see, in this case, we are assuming fully paid up. Right? The question will clearly says the board had called up certain amount, it is paid up certain amount. If they want to bifurcate, otherwise it is always assumed fully paid up. Unless question clearly mentions that partially paid.
Okay, sir.
Partially paid, what happens? Proportion basis you declare dividend, provided your AOA permits. Okay?
Yes.
Point number 3. Go to point number 3. Okay, make sure if you have losses, first all the losses are set off, then only make provision for dividend. And also look at the last point. The balance of the reserve after withdrawal shall not fall below 15% of the paid up capital. Okay, which means make sure your reserve to paid up capital ratio do not fall between below 15%. These 3 points very important from exams perspective. Please keep this in mind. 4 marks question.
So, the second part of the third part, which you discussed, the balance of reserves after withdrawal, which should not be below 15%, is only consisting of the share capital, which is the preference plus equity, right?
Correct. Make sure it do not fall. Your reserves do not fall below 15% of the paid up capital. See, very simple. First point is, if you have average dividend, take average dividend.
If you don't have, then based on the board's decision,
correct.
it will go.
Correct. Second is 1/10 of the paid up capital and reserves. Second point. Third point, first losses have to be covered.
Then whatever the leftover will be paid to the equity shareholders.
Correct. And also another condition is make sure your balance do not fall below 15% that of your capital. Okay. Page number 245. Come to page number 245. Look at the scenario and tell me the average profit. Average percentage of profit. Case 1, case 2, case 3.
Case 1, 10 divided by 2.
Now in the year 21-22, Board of Directors want to declare dividend.
The average will be max and at 7.5.
In the first case, 7.5.
7.5 because it's 15% divided by 2 because only 2 times you declared the dividend.
Okay. Okay. What about case number 2?
Case number 2 based on the board's decision. Whatever the rate they decide.
Case number 3.
Case number 3, the average will be set at max at 12% because that's the only
12%.
rate that is available.
Perfect. Any doubts still here?
Sir, in C1, first point they've given that in any year in the last 3 years, if they are not declared dividend, they cannot declare, right? The rate of dividend declared shall not exceed the average rate in which dividend was declared, which has not declared any dividend in each of preceding 3 financial years.
Yeah, so which means last 3 years, if you not declare dividend, then Board of Directors can take a call.
So in all 3 cases, they have to take, Board of Directors can take a call, right? In all 3 cases?
No, only in the case where there is no average rate is available. So for example, if you see the illustration, Kushal, what we are discussing right now. In case 1, we have an average. In case 3, we have an average. But in case 2, we don't have any average because the company is not declared dividend. So case 1 we can calculate, case 2 we can calculate, but case 3 we can calculate. Case 2, it relies on the Board of Directors. If the board decides to take at 7%, that will become the average.
Okay, point number D. Dividend to be declared from free reserves only. Free reserves are profits or accumulated profits available for distribution of dividend. Okay, specific reserves do not bring them in the bracket of free reserve. Specific reserves are meant for specific purpose. General reserve, free reserve available for declaration of dividend. Okay, declaration of dividend as we discussed. First, your losses and depreciation that should be provided. Point number E. Now, manner of providing depreciation as per Schedule 3. Schedule 3 provides your basis for financial statements, right?
Schedule 2 they have given here.
Depreciation.
Yeah, depreciation as per Schedule 2, but financials are prepared as per Schedule 3, right?
Yeah.
The depreciation, they're saying charge as per Schedule 2.
Yeah.
Interim dividend, you all know.
Yes, attend to general meeting.
Okay, interim dividend, Siddharth, just read out for benefit.
Yeah. Declaration of interim dividend. Section 123, subsection 3 of the Companies Act 2013 provides that the board of directors of a company may declare interim dividend during any financial year or at any time during the period from closure of financial year till holding of the AGM out of the surplus in the profit and loss account or out of profit of the financial year for which such interim dividend is sought to be declared or out of profit generated in the financial year till the quarter preceding the date of declaration of the interim dividend.
Yeah, read further.
In case the company has incurred loss during the current financial year up to the end of the quarter immediately preceding the date of declaration of interim dividend, such interim dividend shall not be declared at a rate higher than the average dividend declared by the company during immediately preceding 3 financial years.
Okay, same 3-year concept goes with interim dividend also. But make sure your average does not go beyond that. Okay, so practically what happens is board of directors recommends dividend. Correct. Take an example, final dividend. Shareholders approve it.
Correct?
Okay. Now this money, whatever, say for example, 50 crore, it needs to be transferred to schedule bank, separate bank account of the company. Schedule bank, not any cooperative bank. Schedule bank. Within 5 days, it will transfer to separate account. From that, next within 30 days, from the date of declaration, it needs to be paid out. You able to understand?
Yes, sir.
First, company will open the bank account, schedule in the schedule bank. From the date of declaration, within 30 days, it will pay out. Okay. Whom does it pay out? To only registered shareholders. Who are registered shareholders?
Whose name is in the register of members.
Whose name is entered in the register of
In the register of companies, actually.
registered of members, ROM.
Okay.
Okay, how dividend is paid?
Cash.
Always it is paid out in
Always
the
in
form of
cash.
cash and not in kind. So cash meaning not exactly your cash. That may be any your banking channels.
Account.
It
Accounts.
can be paid to
Yeah.
So that is within 30 days of opening the bank account.
No,
is
no, within 30 days of declaration.
it? Okay.
Okay, come to page number 246. Not from the bank opening date, from the date of declaration. Okay, 246, point number H. Siddharth, can you just quickly read out point number H?
deposited in special bank account of the scheduled bank. Section 123, subsection 4 of the Companies Act 2013 provides that the amount of the dividend, including interim dividend, shall be deposited in a scheduled bank in a separate account within 5 days from the date date of declaration of such dividend.
Okay, enough. So why I'm stressing out schedule bank is you will get a question saying company has deposited money in cooperative society or a non-scheduled bank. That is a violation. You're able to understand, right? So within 5 days from the date of declaration, it needs to transfer. Okay, next. Point number I.
Point number
HII.
I.
Yeah.
Dividend only to registered shareholder. Section 123(5) of the Companies Act 2013 explains that no dividend shall be paid by a company in respect of any share therein except to the registered shareholder of such share or to his order or to his banker, or shall not be payable except in cash.
Okay. Basic condition one is always to registered shareholder, correct? Second condition is underline to his order, which means take an example whenever there is a beneficial owner. In that case, dividend will come to the registered owner, but however, the registered owner will say, boss, there is a beneficial owner, kindly in this order pay to him. You're able to understand, right? To his order, which means as a registered owner, I'm saying pay to beneficial owner or to his banker, which means I'm saying don't credit to my account, directly credit to my banker's account. Okay, take an example. There is a body corporate as a shareholder, company as a shareholder. Company will be maintaining a separate bank account. In that case, whenever a company has invested and another company is declared dividend and you are in receipt of dividend, you will say, pay this amount to my banker. Okay, please remember these 3 points, very, very important. Always pay to the registered owner or to his order or to his banker and shall not be paid except in the form of cash. Payment of dividend, point number J.
Inferring from section 124(1) of the Companies Act 2013, dividend must be paid within 30 days from the date of declaration of dividend. SS3 hereby clarifies that the dividend shall be deposited in a separate bank account within 5 days from the date of declaration and shall be paid within 30 days of declaration. The intervening holidays, if any, falling during such period shall be included.
Okay, so in between there is a holiday also, doesn't mind, it needs to be included for 5 days. Okay, in 246, answer the illustration number 2, the below one.
Okay. 18.
It should be deposited within 18th, right? Okay, mode of payment. Simple.
Yes, payable in cash may be paid by check or one time.
Point number M. This also we discussed.
Declared paid in case of failure of repayment of yes.
Okay, now look at this flow chart, this diagram that is given. First, you will have a board meeting for proposal, correct?
Yes.
Dividend will be recommended. This is the final dividend will be declared by in the AGM. Okay, then once that is there, within 5 days, you will open a bank account, correct? Within next 30 days, you will pay out. Okay, now take an example. Now company has paid out dividend, but however, the amount has been bounced back to the company's account. There is no proper shareholder or his account or that person is demised. There is no legal heirs. Okay, you have got back the credit. That is not your fault. You have done, but genuinely you have got back the credit back to your account. In that case, what happens? You need to open a separate bank account saying unpaid, unclaimed dividend. This is the second bank account. One is scheduled bank wherein you deposit.
The dividends amount.
Correct. This is only in case there is a bounce.
If the dividends comes back to you because of no.
Correct. In a number of reasons.
Yeah.
In that case, you need to open a separate bank account called unpaid dividend account. Within next 7 days from the expiry of 30 days, you need to remit that amount to that unpaid dividend account. If you don't do it, interest of 12% will be charged. Which means company needs to pay that 12% interest for failure for transfer. You're able to understand?
Yes, sir.
5, 30, after expiry of 30, 7.
7 is from the date of bouncing back, they have to open.
30 days, expiry of 30 days.
After 30 days, within 30 days, you have to pay to the shareholders.
Correct. If you pay within 30 days, fine, well and good. But even after 30 days, you are not able to pay for a number of reasons, then you open an unpaid dividend account.
Then you said one more thing, sir, that is when you have not defaulted, but it has bounced back. That is.
In that case, you try alternative, try till 30th day.
30th day, okay. Even after not sending, you have to pay 12%.
Yeah. In that case, if you do not transfer this 12% interest, if the board of directors do not transfer the whatever left out balance to unpaid dividend account, then they will be charged 12% on that amount.
Okay.
Which means, Manoj, you're telling this like the board of directors they met and they decided to pay the dividend. The dividend amount is fixed. Okay. Once that amount is decided, within 5 days, the company opens a new account and transfer the dividend money to that account. And from the data, and after that, from the date when the dividend payment decided in the board meeting, within 30 days, the company has to disperse the amount to the shareholders. Now, the second case comes is the payment was done by the company, but it got bounced back to the company's account again. Then, after getting that bounce back amount, within 7 days, they have to open an unpaid dividend account and have to transfer that amount within the 7 days. If they don't do, then the company will be charged with 12% of interest.
Correct. On the amount proposed to be transferred to the unpaid.
Yes. And also the second case, what you told is if the company could not pay the full amount of dividend which was decided after 30 days, still they have to transfer that leftover amount to this unpaid dividend account within the 7 days. Otherwise, on that amount also the company will be paid 12% of interest.
Yes. Okay. Now, till how long can you retain this amount in this account is for a period of 7 years.
Okay.
7 years, you maintain this unpaid dividend account. If somebody comes in between, pay them, or else this amount goes to IEPF, Investor Education Protection Fund. You're able to understand?
Yes, sir.
Till 7 years, as a company, do whatever possible you want. That is, there is a format for which we need to disclose, put it on our website, saying these are the dividend we declared, these are the following shareholders we have, these are the amounts that has been bounced back. So all the details as per the format, you will keep putting it on a website. If somebody is willing, some shareholders are there, they can come to the company, they can collect it. Amount will be paid. But once it is transferred to the IEPF, there is a different process altogether. IEPF is a central government fund, Investor Education Protection Fund. You would have heard IEPF. It is a central government fund. So among all other credits that goes there in IEPF, this is also one of the credit. You're able to understand?
Great.
5, 30, 7, 7 days, 7 years, IPF.
Yes. One second. And the flow is this.
Yeah, Siddharth, just read this point, unpaid dividend point.
Okay. Unpaid.
The unpaid dividend account, section 124.
Yeah. Unpaid dividend account, section 124. Section 124, subsection 1 of the Companies Act 2013 states that when a dividend has been declared by a company but has not been paid or claimed within 30 days from the date of the declaration to any shareholder entitled to the payment of the dividend, the company shall within 7 days from the date of expiry of the said period of 30 days transfer the total amount of dividend which remains unpaid or unclaimed to a special account to be opened by the company on that behalf in any scheduled bank to be called the unpaid dividend account. 124(4) of the Companies Act 2013 states that any person claiming to be entitled to any money transferred under Section 124(1) of the Act to the unpaid dividend account of the company may apply to the company for payment of the money claimed.
Okay, yeah, next. Details of unpaid.
Details of unpaid dividend to be placed at the website. Section 124(2) of the Companies Act 2013 provides that the company shall, within a period of 90 days of making any transfer of an amount under Section 124(1) of the Act to the unpaid dividend account, prepare a statement containing the names, their last known address, and the unpaid dividend to be paid to each person and place it on the website of the company, if any, and also on any other website approved by the central government for this purpose in prescribed form. Effect of
Okay.
non-transfer of the dividend.
Yeah, very, very important. Mark that as important. Effect of non-transfer of dividend.
Section 124, subsection 3 of the Companies Act 2013 provides that if any default is made in transferring the total amount referred to in Section 124(1) of the Act or any part thereof to the unpaid dividend account of the company, it shall pay from the date of such default interest on so much of the amount as has not been transferred to the said account at the rate of 12% per annum, and the interest accruing on such amount shall ensure to the benefit of the members of the company in proportion to the amount remaining unpaid to them.
Okay, come to page number 259.
Okay.
That means the page number, sir.
259.
259.
So this opening unpaid bank account is applies to the interim shareholding dividend also, is it?
Yes, yes, yes.
Okay.
Punishment for failures to distribute dividends.
See, there are in this section 127, there are two cases. One, when can you, when can the company board of directors be held liable? That is case one. And second case is when can they not be held liable? When the directors can be saved. Two categories. When the directors are in default, when the directors are in safe zone. Very, very important. Double star. Okay, quickly read this. We'll take up to
Which one, Manoj?
section 127.
Yeah. Punishment for failure to distribute dividend. Section 127 of the Companies Act 2013 provides that when a dividend has been declared by a company but has not been paid, or the warrant in respect thereof has not been posted within 30 days from the date of declaration to any shareholder entitled to the payment of the dividend, every director of the company shall, if he is knowingly a party to the default, be punishable with imprisonment which may extend to 2 years, and with fine which shall not be less than 1000 rupees for every day during which such default continues, and the company shall be liable to pay simple interest at the rate of 18% per annum during the period for which such default continues.
Okay, so as we discussed, one board of directors, once the shareholders approve, you need to declare dividend within 30 days, correct?
Yes.
Now they have not done it, that is why this problem. Okay, please make a chart and write down this very particular point, very, very important. Okay, now when the board of directors can be saved? Next, read further.
Provision
Yeah.
2, Section 127 of the Act, Companies Act has provided a list where no offence under this section shall be deemed to have been committed, where the dividend could not be paid by reason of the operation of any law.
So, which means there are certain restrictions in the law, okay, for payment of dividend. As per the law, you are taking shelter. Okay, is again as per the law, genuine. This case is genuine. You can be saved. Point number 2.
Where a shareholder has given direction to the company regarding the payment of the dividend and those directions cannot be complied with and the same has been communicated to him.
Okay, you remember that point, order to registered owner.
Yes.
Registered, there is a point order to be read, right? Now he has given an order. I am a shareholder, I have given order that all my dividend will go to Nagendra. Now Nagendra, he doesn't have a bank account, he has given some dummy bank account. Okay, all bounce back. Now after that bounce back has happened, company has clearly communicated to me.
Stating that
money we tried to reach out, but this is the problem.
Yeah.
In that case, they're safe.
Yes.
See, point number C.
Where there is a dispute regarding the right to receive the dividend.
So they are trying to find out in point number 3, that is point number C, that whether you are actually a registered owner or not. Right, only on that basis, you will be able to determine whether you are to receive the dividend or not. Okay, there's a dispute. Okay, point number D.
Where the dividend has been lawfully adjusted by the company against any sum due to it from the shareholder, or where for any other reason the failure to pay the dividend or to post the warrant within the period under this section was not due to any default on the part of the company.
Okay, point number D. Can anyone explain point number D quickly?
The dividend has been lawfully adjusted by the company against any sum due to it from the shareholder.
If there is any amount which the shareholder has to pay back to the company, that amount will be adjusted against this dividend.
What is that called? What is that money called? Call money, right?
Yes, sir.
What, Manoj?
Call money. It is called call money. Board of directors from time to time they have authority to make a calls, right? So board of directors have made the call, but you have not remitted the money, not deposited the money. In that case, lawfully you can be adjusted. Okay. Let me share 2 or 3 questions, just see if you can answer.
So,
Yeah, madam, tell me.
Sir, this 12% that happens after the 7 days, after 30 days.
Correct.
So, yeah, so this 12%, it should go to the person to whom the dividend is actually to be given. And in case at the end the person doesn't come, then even this 12% goes to IEPF.
No, this 12% does not go to the member or shareholder. It is penalty provision. It goes to the government.
Okay.
That's a default. Okay. Are you able to see this point? Question number 1.
Yes, sir.
Yeah, clearly anyone read out and just see if you can answer.
Valuable Limited declared dividend at its 10th annual general meeting. Mr. Strong holding only 19% equity share had informed the company that is the dividend to be paid to Mr. Week and gave the bank account details of Mr. Week when the company electronically transferred the dividend amount to Mr. Weeks' bank account, the amount returned back to the company, as that bank account was not operative, and after the expiry of 1 month, now Mr. Strong is contemplating to sue the company for non-payment of the dividend with reference to the provisions of Companies Act 2013 state if his action would be in order.
Can you answer this 5 marks question? Yes or no?
Yes.
No, he can't sue because he has already informed the company that his dividend should be paid to Mr. Week.
Okay.
In that case, when and he has given the bank account details of Mr. Week as well.
Mr. Week's bank account was not active.
So it is not the mistake of Mr. Strong, who has already given the details. So the company can't.
Okay, what you are explaining is right. Pursuant to the provisions of the Act, how is your answer going to be framed?
Provisions of Companies Act. With reference to the provisions of Companies Act, the company made a payment to Mr. Weeks' bank account on which because of the account's inoperative.
No, this is all whatever story you're writing, that is your conclusion. First, you need to write what we discussed now in the exception.
Yeah. So, first thing will be is the company will send a communication to Mr. Strong.
No, first you will say, pursuant to the provisions of the Act, section 127, there are certain exceptions wherein the company cannot be held liable. Okay, you will write all point A, B, C, D,
5 points.
E, all the 5 points. Then whatever you are saying, conclusion you will write. That is how you should write the answer. Directly don't write the conclusion first without writing the provision. You will get 0 marks. You are able to understand?
Yeah.
You know the logic and you know the answer, but write the provision. That is why provision is important.
Okay.
You are able to understand, right?
Yeah.
Not only for this entire Companies Act I'm saying, I'm repeating again, write the provision first, then your conclusion. Okay. Just so you can answer this point number D.
Yes,
Sidharth, read out clearly.
SKD, an employee of More Limited, met with an accident and died. The accident occurred when SKD was on company's duty. He held 100 shares partly paid. Normally, the company has a first and paramount lien on the shares. The board of directors, however, relaxed the said provision with regard to the 100 shares held by SKD as a goodwill gesture on the part of the company. Is the action of the company valid? State the reason. Also state whether the company's lien can be extended to dividend payable on such shares.
Lin, that's called lin.
Yeah, lien. Sorry.
Can they extend the lin? In the first place, they are saying as a good gesture they are doing because he died. Okay, whether can they do it? First question. Second, they're saying can the company extend the lin?
Sir, can you explain the questions? What are they asking?
Same, whatever you just read the exception, right? See, one is employee, he died, his shares were partly paid up. Now, board of directors as a good gesture, they have made the shares fully paid up.
Okay.
Whether that is allowed. Second, that is what they're saying. Is the action valid? State the reason as to whether the company's lien can be extended to dividend payable on such shares. Which means that whatever the amount that has been given, can that paid up, whatever is there, can you pay the dividend for that value? Same exception, same category. where a
So
dividend has been lawfully adjusted by the company against some due. Right? So board of directors cannot do that. Even for a good gesture, they cannot do that. It is not their own money. It is not, it is company's money, shareholders' money, right?
Yeah.
yes, sir.
Right? It is, they are not giving out of their own pocket for a good gesture. If they want, they can give the money with the one,
Personal.
right, out of the own pocket, they can give as a good gesture, not company's money. So action of the company is invalid. They have to call the money. So who will be entitled to take that call? The shares will be transferred to legal heirs, right?
Yeah.
So he will be liable to pay the amount. And if any dividend is declared on that particular shares,
Yeah.
then it can be lawfully adjusted. That is what we have discussed here. Point number D.
Yes, sir.
Okay, question number 4. Can you answer this?
$125.
Question number 4.
List the conditions to be satisfied for the declaration of dividend out of the reserves. They are asking.
Yeah, what is the answer? We discussed this. Don't look at the book.
That as per section 123, sir, if they have not paid depreciation, they cannot issue dividend.
Correct.
And it is paid out of, if they have not defaulted any current year payment, current year dividend or previous year dividend, they cannot pay.
Correct. So all those points you will write. Okay. Okay. Any doubts still here on today's class?
No, sir. Sir, means small clarification means before declaring the dividend, they are saying there should be the depreciation on a fixed asset. Why, sir?
If you, meaning they are asking just to comply with the provision. That's all.
Okay.
You are appropriating the profits for depreciation. Then only you can declare.
Okay.
Complying with Schedule 2
Okay.
and Schedule 3.
Okay, sir.
Any
No doubt.
doubts? No doubt, right?
No.
Chapter is very simple. You will get definitely 4 marks or a 5 marks question. Just application of mind is required. Okay, then we'll catch up tomorrow and we'll close this chapter.
Yes, sir.
Right, in between on Sunday, maybe 4 to 5 hours, we can just run through about. Okay, come to page number 6. Just we'll glance on what are the topics that we covered.
Page number?
6.
6, ma'am.
Introduction to company law done.
Yes, sir.
Okay, share and share capital and debt capital and deposit. These two simultaneously, 2 chapters I'll complete together.
Means the which one, sir?
Chapter number 2, chapter number 4, together at the stretch I will complete because concept is similar.
Okay.
Okay, chapter 3 we are done.
Okay.
Chapter 5 done.
Yes, sir.
Chapter 6 tomorrow will be done.
Okay.
Yeah.
Chapter 7 done.
Chapter 8.
Yes.
Chapter 8 done.
Yes.
Chapter 9, few concepts we are yet to discuss. It is ongoing. Chapter 9. Okay, for example, board of directors report we are doing. Okay, things that we need to discuss is website disclosure, annual report, annual return. Okay, certain policies. Okay, question, chapter number 10 we need to discuss. Chapter number 11, if we discuss entire chapter 1 to 10, then automatically chapter 11 also gets covered. Already few registers we have already covered. For example, register of charges, register of directors and KMPs. So detail they have given. Okay. Chapter number 12 yet to complete. 13, this is again practical aspect. I will just show you. This will not take much time. Chapter 14 also, chapter 14 actually is wide. Okay, across the globe, the trends has been given from exam perspective only. We'll discuss. Okay, entire part 2 is done.
Yes,
Part 3, yeah, part 3 also this is very simple, 10 marks. This is just a code of conduct and how secretarial standards are made. Okay, and once you pass the exam, what you should consider, whether to practice or go for employment, that is what is given here. Right, so I will have tomorrow one class, 7th and 8th one class, 14th and 15th one class. So that is 2, 6, 8, 10 hours, plus in between 5 hours. Done, right?
Yes, sir.
Hope you guys are revising.
Yes,
I think next month is your, considering November is tomorrow and just one more month to go, right?
Yes, sir.
Put in that efforts. Still, you have time. As I said, when you get the result on February 25th, you should be crying with happy tears, not the sad tears. Right? Put in that effort. Stop all your movies, your WhatsApp and all those things. Stop now. Everything can start after giving December attempt. 8 to 10 hours must study. Those who are working, find time. Take appropriate leaves for exams. With 10 days, 15 days, I am sorry, it will not work out. Take proper 1 month leave. Prepare for exams. Those who are studying, constantly study. Don't divert. Give equal importance to all the subjects. And one subject or 2 subjects, make sure you score 60 plus. Now it's a time to be very strong. Prepare yourself to be the strongest next 2 months. Without strong mindset, you will not clear. All your weddings, all your relatives meeting, it can stop for 2 months. We have all done sacrifices. You can also do. Everything you can start after January also. Right?
Yes, sir.
Okay, then we'll catch up tomorrow and complete the dividend chapter. Okay? Please go back and revise.
Yes, sir.
Thank you so much. Bye.
Thank you.